they're happy, I think, with where interest rates are. We may see some very small rate hikes moving forward, but we're definitely, if we're going back to COVID and we're flattening the curve on the rates and how fast those rate hikes are coming. And to the point where a lot of us have always said the only reason they're raising rates now is so they can lower them again later.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to have my friend Steve Cope of Silver Viper joining us again on the show as we dig into some of the latest silver news that is going on out there. We're recording as of Thursday morning, shortly after there was an inflation report that came out, which showed that, at least according to the CPI, prices fell slightly and had an interesting chart pattern with gold and silver spiking up for a bit and then coming right back down. But we will dig into all those things and more with Steve. So, Steve, great to have you back on the show, and Happy New Year to you. And how is everything going today?
Yeah, thanks, Chris. Happy New Year to you as well, and all your viewers. Yeah, it's going well. Interesting day. I'm glad that they somehow didn't hammer us down, so we're way down on the day given the news. But yeah, interesting trading, and nice to see that it's rebounding from the pushback down, and we're pushing up into those new levels higher than we were at last year. So I mean, last time we talked, we were about to break even on metals prices, and now we're a little bit ahead of that. So it's trending in the right direction.
Yeah, well, as we mentioned just before we hit the record button, certainly interesting past 4 months, going back to September when we had silver prices under $18 for a little bit. And with silver at 24 today, it's decent 33% rally. Gold, as we will dig into, has also touched back above 1900, which all just pretty interesting, especially given that we still have the Fed hiking, no less. But either case, as I mentioned, on Thursday morning, we did have the latest CPI report out showing consumer prices fell 0.1% in December, which was in line. And on an annual basis, the headline CPI still up 6.5% over a year ago. The core, where you strip out food and energy, at 5.7%. And there was an interesting note I saw here that I thought would be interesting to get your comment on, because looking at, here's the last 12 months of these readings, and Craig Hemke in his column pointed out how right now with that 6.5%, you're still including all of these. But as we get towards the end of the year and drop out some of these bigger figures, especially the 9.1%, at least plausible that we can see that those CPI readings and the Fed's PCE deflator showing a lower inflation rate. Whether that means that the world is good and inflation is actually under control, we'll leave aside. But at least, as we've heard people talk constantly about the Fed pivoting, again, highly contingent upon inflation numbers coming down, case to be made that things are well on track for that. And curious your thoughts on all of this and where we may be headed in terms of inflation and how the Fed might respond, which again remains one of the key drivers for the metals pricing.
Yeah, I mean, I think you're basically saying what you're saying, but the Fed has already kind of, from what you can, when you read between the lines of the things they're saying, they're already ready to pivot. They're happy, I think, with where interest rates are. We may see some very small rate hikes moving forward, but we're definitely, if we're going back to COVID and we're flattening the curve on the rates and how fast those rate hikes are coming. And to the point where a lot of us have always said the only reason they're raising rates now is so they can lower them again later and get back to a normal economies. That people are hurting with the interest rates up where they are. I mean, you can see it in the housing market up here in Canada. I think Canada's been as aggressive or even more than the US, and in our case, our mortgage rates are a lot higher than what they are in the US. So you've seen the mortgage rates coming down throughout the last year in the US, and that hasn't been the case here in Canada. They continue to go up with each rate hike, which has really put a lot of pressure on the people that have been able to buy homes in this country, and now all of a sudden they're hitting trigger points on their mortgages, and they're doubling their payments over, and they can't afford them. So this rate hike has been really bad for economies and people's quality of living. And again, I think there's a lot of pressure on the governments to turn that around and get people back to somewhere normal. And like I said, the US has been showing signs that they plan on slowing, if not stopping, interest rate hikes moving into this year. We may see, like I said, one or two more very small ones, maybe quarter point type hikes. And then I think you're going to see a period of not a lot of change for the remainder of the year.
Yeah, and it's interesting. I'm going to pull up the dollar index chart here where we see, again, this is as of Thursday morning, dollar index down 69 cents. And while the Fed, again, they're still hiking and talking about hiking, yet we see the light at the end of the tunnel. Whereas in Japan, they finally allowed their interest rate on their 10-year bond to go up, still a small amount, but up to 50 basis points. ECB giving the indication that they still have a ways to go, which really could set up the dynamic that the dollar index could be falling lower going forward, which obviously when we've seen how gold and silver have traded pretty much inversely of the dollar index, another thing that gives us a little hope going forward for the metals prices.
Absolutely. Yeah. I mean, again, we've seen the throughout COVID and to today, the people fleeing to the US dollar as their safe haven, and again, as we move forward, I think, the more and more smart people that are reading what's going on around the world, they're seeing, the talk of, what China and Russia are doing, what the BRICS nations challenging the US dollar in trade and, removing it as the petrol. Like it's all signs are pointing that things are changing and that US dollar should be weakening given the debt in the US, given, what else is happening in the world. It seems crazy to me that people still flock to the US dollar as their safe haven, because I think we're getting closer and closer to the point where, that's changing. Certainly as a standalone, world currency, it may be part of a basket moving forward, but things are changing and they're changing quite quickly.
Yeah, well, it's an interesting dynamic because you have so much dollar denominated debt out there. So I wonder if they're going to the US dollar as a safe haven or just more so because they're forced to in many cases. Yet, despite all of that happening, as I did mention earlier, we actually saw on Thursday gold pop back above $1,900, close to its all-time high. Again, 1,900 was the high back in 2011, so level that I think has some significance. Again, the price did go over 2,000 a couple of times, but are you surprised that given the higher interest rates, and still a couple more hikes to come, that gold has been able to do as well as it has, and that we're sitting here, at the time of this recording, 1897, so still very close? And thoughts on just the fact that we've been able to make it back over 1900?
It's definitely an important psychological number for investors, and seeing it, the way it's moved up in the last couple of months as quickly as it has is also a good sign that we're trending towards, better markets. I mean, again, it's tough. Like you say, we were at 1900, in 2011. Well, what have we been talking about before this is inflation, and you're going through over 10 years, of inflation that's driven up the costs on all these producers. And you're at a point where, at 1900 now, they need much higher numbers in metals just to really make a good go of it. They're making money at 1900 on the gold side, but those margins should be a lot bigger and need to be a lot bigger, for the business models to be sustainable moving forward. Because the other thing that's happening in the industry is that costs are going up, and the cost of the deposits and the grades are coming down. So it's going to cost more and more to operate these mines to bring out gold or bring out silver from the ground. And, we need to see dramatic increases in metals prices moving forward as an industry for, the mining companies to make money and investors to make money investing in them.
Yeah, and we did have an interesting note here from Metals Focus mentioning production costs have now caught up with prices, leading to a compression of industry margins. Now, this is on the gold side. They mention on this basis, average margins for 12 major producers covered in our report fell by 76%, down to $39 an ounce. They said Q3 2021. We were wondering if maybe that was supposed to be 2022 when a lot of those inflation pressures were really hitting. In either case, I was surprised to hear that the number would be that low, especially for the gold miners, but speaks to what you were saying at how it, even at the higher prices now, still getting close to the cost of production and not really going to be helping the supply, you would think.
No, it's they need higher prices. The expectation is that higher prices will come, and at some point, what's your choice? You're not, all these mines aren't going to operate at a loss as we continue to have inflation and costs around the board, whether it's salaries or fuel costs or everything else, continue to taxes or everything that exists for these miners. They need the prices to go up, and they should be, steadily increasing, at least with inflation year over year. And that hasn't been the case. We've had these wild swings in metals prices, but for the guys that are doing the production, they need some consistency. And it's why when you look at majors and they're evaluating new projects, they use such low gold numbers, in their resources and their modeling behind a project, because they're trying to build in these massive swings. But the inflation that we have seen over the last decade, still erodes away all those, safeguards they put in. So yes, the safeguards have worked. They're still making a profit at 1900 or 1800 and some gold, depending on when that year actually is in that article. But it's coming down, and it's going down by year. So we need dramatic swings in gold and to set new lows and to certainly push to new highs. One, to trigger the new assets coming on, like I said, because they're just going to come more, it's more expensive, and you're going to get less returns because the grades across the world are coming down. So again, I think that's a good spot for investors to be in, and being contrarian and still seeing gold and silver where they are. And we know it's even worse on the silver side for production and the costs and what's needed for them to make a go of it. And the supply of silver for new projects is far less than what's out there for gold as well. So again, it's why we're all here, why we all believe in these metals and are investing in them, because it's a ticking time bomb, and it has to go up, and it has to go up in a pretty substantial way.
Yeah, and I'm glad you mentioned the silver side there, because now around $24 silver, a little more room, yet I don't get the feeling, and certainly from the conversations I've had, that it's not as if there's a bunch of new silver projects being launched. In your opinion, is there a certain level that silver needs to reach before we see more activity going on there? Is it that silver needs to stay at a certain level for a longer period of time, or what do you think it takes in silver before we see more projects getting back out there?
I mean, in the short term for the producers, I think they want to see 30. I mean, I think 30 is a big number psychologically for everyone to sustain and hold it, above that number. At that point, the silver producers are the primary silver producers. Obviously, the guys, a lot of silver production is a byproduct, and whatever silver is trading for is great because it's just, it's coming out. It's something they're recovering. Their models are based on whatever their primary metal is, whether that's gold or copper or zinc or whichever, depending on the mine. But the primary silver producers, which we see, they struggle. They are still struggling down at these prices. More and more of the silver producers you've seen over the years, their gold content has gone up. Pan American's the number two silver producer in the world right now, and their production's over 70% gold. Fresnil's number one. They're increasing on their gold side. You look to the primary silver producers are smaller and smaller in market cap, and when they're compared to the gold companies are mid-tier producers. And you're getting into the First Majestics, the Endeavors, the Heclas, the Coors. These are all companies, but a lot of them have been transitioning more and more towards being gold dominated and losing that primary silver focus. So if they want to continue to be primary silver, companies, they need much higher prices, because silver hasn't made those jumps, and it's expensive, and it's, like I said, even harder to find than gold in the ground now. I remember I've looked at it before, but I think it's extracted closer to a 10 or 11 to 1 basis to gold, and yet you're trading at 80 or 90 to 1 on the ratio given the day right now. So it's something that dramatically has to change on the silver side. And for either we're going to lose the primary silver miners and they'll just go away and become gold miners that have silver byproducts, but something has to change if they're going to continue to operate these primary silver mines, and they're needed. If we continue to move towards this green movement, you need silver, and we need people that are focused on producing silver to start supplying what's needed for infrastructure, what's needed in the electronic components of these vehicles, and solar and health and medical. Like we said, we've talked about in the past, we're already operating at a deficit, and that deficit's only going to get larger as you don't bring on new projects that have large silver components to them.
Yeah, that certainly is one of the things that I've found interesting since early on when I got into this, how so much of the silver consumed as opposed to the gold, where counting more on the investment side. Have you seen, as we've seen these inflation numbers come down a little bit, any easing of any of the costs on the silver side for the different things that the companies have to spend for? Is it still
I
generally
mean,
pretty
if
high?
you
And
were yeah, if you were negotiating a new drilling contract, you might be able to factor in a slightly lower fuel cost. But I mean, when we were looking at those inflation numbers, I think one of the important notes on that was the only reason they really came down was because fuel costs had come down. I mean, you still go to a grocery store and you want to talk about food, and I look at the grocery store up here, and food costs to me still seem to be skyrocketing. I think we were laughing around Christmas, and a head of cauliflower up here cost like $18 or something insane because there was some weird shortage or something going on. But it's you go to the store, and every time you go to the store and you look at what you get for $100 at a grocery trip, and it's less and less and it's less, and I don't know how a lot of families get by on that. It's when we're looking at it, and then I'd start saying you're not buying this at the grocery store anymore. Go to forget organic peanut butter, go to regular. Like my wife was buying almond butter and I saw a $15 a jar, and I was like, forget that. Like it's just craziness what some stuff is costing at the store. And so again, the inflation is there. Inflation is very, alive. Those numbers, like I say, fuel costs can jump up and down, but at the same token, I've read articles that think fuel is going to skyrocket again this year. And so what's that going to do for their inflation numbers and what they look like?
yeah, and that was one of the things they mentioned in today's reading, a lot of that based on the lower oil price. Although, Steve, as you mentioned earlier, whether people are still looking to the treasuries and dollar as the safe haven, interesting note here from Luke Groman, where he said commodities over US treasuries, as there was an article that came out a couple days ago. Saudi Arabia seeks 170 billion of mining investment by 2030. And I think it was you who mentioned on the show a little while ago that Canada, your government there, looking at some strategic metals. Of course, they did not mention silver yet. Just interesting in parts of the globe where we see less of the reliance on the petrodollar agreements with China and deals with the eastern side of the globe. That what are they spending a lot of money on here is digging up some of these metals that, as we're going greener, we're going to need. So seems like a bit of a different environment in other parts of the world than we're seeing here in the West.
Yeah, and I mean, again, you mentioned China being the big player and all of that, and China, over the last decade plus, has made a living off of going and operating in countries where they can operate, their way, where they're not, encumbered by the ideals of the West, and can go in, into, countries in Africa and, you know, build a city, and then all of a sudden be exporting, with zero tax on their exports in that, particular country. And they've been very smart. They bring in their own workers, they bring in their own workforces, and pay them in a very different way than any of the Western companies would pay them and treat them. So again, they've been very smart, I guess, in a way, and ruthless, but picking those countries that they can go and operate in and know that they can operate and dictate how things will work in certain countries. And their production has boomed because of it, where Western mining companies can't go in and can't do that. They won't operate. We have rules that we have to answer to our governments on. They don't have the same human rights opinions that we do over here. And some can argue that's going to be the downfall of the West, is the fact that we can't compete with the East based on our ideals. And I agree with our ideals, but it's hard to compete in business with them when they can go into these countries and basically take everything they want for a very low cost.
Well, does it set your mind at ease at all that we find out Treasury Secretary Janet Yellen to stay on as Biden's request as the showdown over the new debt ceiling limit? I guess we're getting close to hitting that again. So that sets your mind at ease at all to know that Janet is still going to be manning the ship there?
Oh, I'm thrilled. Just so much confident in anything that's going on in the Democratic side of the US.
Yeah, and again, as that debt ceiling nears, again, we see something that gets brought up from time to time, but the spending on servicing the debt expense here in the US has obviously gone up quite a bit, getting higher with the higher rates. And then as you tack on all of the new debt that's coming out, as I'm guessing we don't hit the debt ceiling and all of a sudden get a balanced budget or anything like that. Last one to run by you here. Just if you had any comments, we've kept an eye on the declining inventories. Finally, a month on the LBMA where things leveled out a bit, although it's been quite a decline over the past 2 years in London as we've seen metal come out of there. Similar with really a sharp drawdown ever since that silver squeeze, amazingly, almost 2 years ago now, if you can believe that.
Shock.
But as we see India and other places importing a lot of silver, any thoughts on these declining inventories and perhaps where more silver would be coming from? Or if that becomes an issue that does force the price to move higher at some point?
I think you hit it right there. I mean, that again, I think a lot of this silver is moving east. It's being accumulated by those countries gearing up for, one, just to have it as strategic, in the of silver, the uses and manufacturing everything they're going to need it for, but also, to back currencies. And we've kind of seen the talk, we've seen Russia and China talking about their, precious metals backed currency with the BRICS nations. So of course it makes sense for them to be all accumulating as many of these ounces as possible to put them, if they're going to back and have it at, some sort of functional price that isn't, some astronomical number that gold and silver are being valued at. But again, I mean, where's it going to come from? You're not going to get silver to replace that. And it becomes harder and harder every year. And so you either need prices to skyrocket, which I think they will, because that's what those countries want that are accumulating want to have happen. But, we don't have the projects, and it takes a long time to get projects into production. So even if the ones that are out there that are quality that would make a go of it at today's prices, permitting and everything else, you're talking about years and years to get those things into production to start making a dent on, this deficit that we're seeing as we move forward. And you mentioned Canada partnering with the US and starting to identify. I mean, to me, if they believe that these countries are going to back, you need to see gold and silver as strategic metals that they should be investing in as well to guarantee that those companies will be selling their gold and silver to the US or the Canadian government to hold, for manufacturing or for, just backing whatever they need to back in when their reserves. So it's all going to change, and we're getting closer and closer the more and more we see, these various things happening. But that's a shocking that stockpile going down as dramatically it is a very shocking number.
Yeah, and I guess we'll see if we get any comment from Janet Yellen or others in the Canadian or American governments about any thoughts on silver and gold. Although, fortunately for you, you've positioned yourself and your company well as one of the projects that is going after gold and silver deposit. And you actually had some news out on Thursday morning that perhaps you could touch on as you had some results from your geophysical and geochemical survey at La Virginia, and perhaps you could walk people through the latest news there.
Yeah, I mean, this has been the ongoing work at the project while we've paused drilling, is just to really start understanding a lot of the surrounding targets away from our El Ruby discovery and that portion of the deposit. And it's really been eye-opening as the more and more, we fine-tuned our sampling and combined it with the geophysics and starting to find these, new zone after new zone at surface that are hitting some pretty nice numbers, and that, very much have the potential to be new discoveries when we, start drilling them. The El Molino area, which you can see on the map there, is up in the kind of right in the middle of that image. Highly prospective, especially the southern end of it, where we're seeing these parallel breccia structures all come together, and our breccia structures tend to be where our highest grades are. That Los Cantiles El Oriental shocked us. Some of the grades that we saw down there that you can see in the press release, that one has been an area we haven't focused on that much. It actually has pretty easy access. There's a road that goes right beside those, but we thought those were probably too far west of the main structure. But the fact of what they're running at, and there's a couple old workings there, and the dump piles and that, and the grades that we're seeing, I mean, those definitely are producing some very interesting numbers and warrant going back in and drilling. The Macho Libre area, which is 2 kilometers long, has been producing, again, on the southern end of it, some very nice numbers and is an area we're very interested in. And that Macho Libre trend is very important because it comes into that El Ruby, where our El Ruby deposit, where we made our discovery. It comes in on a north-south basis, where the El Ruby structure is kind of more bending to the west, and where those two come together, it's which trend is more important, and it may be that the Montreal trend is more of the dominating trend that carries a lot of mineralization. So and that's just some. I mean, there's lots of new areas that are popping up. Our understanding of the entire package, the project as a whole, and how it relates to the historic area that's off this image further to the southeast, where Pan American and Mine Finders had their exploration, made their discoveries at Las Huatas and Virginia. It's a massive land package, and it's something we've always said, like, there's so much mineral activity on this project that we know we're going to make additional discoveries as we move forward and grow this dramatically in size. We've already got a resource of 700,000 gold equivalent ounces right now, or 49 million silver equivalent, but we've done a bunch of drilling since then that will have expanded that by quite a bit. And we're seeing here just how much prospect there is to increase that dramatically as we find additional El Rubies or additional Las Huatas and Virginias around this whole package. And then you can see Ruby North, another area that's barely been tested. We hit mineralization a few holes we put up there, but that's at the end of our flat plateau of El Ruby and continuing. That's 2 kilometers away from El Ruby, highly prospective. And then off the plateau, sampling has shown that mineralization continues going along that same trend, that direction, all the way up to La Gloria, which is a 3 kilometer by 3 kilometer zone of alteration. That's a big porphyry target that, again, is speaking to the mineral activity happening on the project. So it's a project that needs lots of work. We're off to a great start, and we're positioning ourselves to really be, accurate. And when we do spend the money on drilling, this year, it's going to be very targeted and very, to our best possible bets of making new discoveries.
Yeah, and certainly, again, when you mix that in with some of the economic and geopolitical things that are happening that we discussed earlier, good position to be in, especially at this particular time. So, Steve, we will have the link to the press release with all the details and the numbers in the description field below, which people can click on. Although, if they have questions, would just like to talk with you or someone from the company to get a better understanding, could you just let folks know the best way to reach you?
Yeah, absolutely. All the information's on this website, but you can, write us at info@silverviperminerals.com via email, or you can call the office line, and it has, the various ways to reach everyone within the company, but that's 604-687-8566. And then the list of extensions is on there. But yeah, please feel free to reach out. I'm happy to chat and talk about what's going on with the company. And then as we continue to move forward, we have the Canasil acquisition announcement that we're still working through our due diligence on it, but that's, again, a very exciting thing that brings in a whole lot more of exciting projects that our geologists love into the company. So there's lots of things on the go with the company right now, and we're more than happy to chat with anyone about what we envision and what we see for the future of Silver Viper Minerals.
Well, Steve, I appreciate that. Appreciate you making some time to discuss the interesting things going on in the gold and silver world. And again, congratulations on the news. People can find out more at silverviper.com, and we will look forward to catching up with you again next month.
Thanks, Chris. Yeah, it's always fun.